Big story this morning that we're tracking. The United States has cut reciprocal tariffs for Bangladesh, where their imports will now go to 19% from 37% under a new bilateral trade agreement. This is the catch. The agreement also includes duty-free access to selected textile and apparel goods made with US-produced materials. How will this impact the industry? Because you're seeing that impact on a lot of listed textile companies and exporters today. Pallab Banerjee, MD of Pearl Global, joining in to talk more on this. Pallab, a very good morning to you. Now, just explain to us what you have gathered so far, because we're at 18%, Bangladesh is at 19% in terms of tariffs. On the face of it, we have a slight advantage. But there are certain segments of textile companies which will have duties going down to zero, I believe.
Yeah, good morning, Tamanna. So, first of all, like Bangladesh had some advantage over India because of the ecosystem and the kind of size of business that they do, and this is incrementally, I think, better. Bangladesh gives a lot of importance to the textile and apparel trade, and especially with all the countries, including US. So this is marginally makes things better for them, and the particular thing that you're speaking about is the duty-free access when they take some input from the U.S. raw material, that is the cotton or synthetic fiber, and make the garment out of it. And there's a certain percentage. If that percentage of contribution is going from the U.S. raw material, then they get a duty-free advantage. So both these are incrementally going to help Bangladesh, but not a major shift from, we are at 18, they are at 19. They were at 20. From there, they come back to 1% less. And US, let's see like how this 19%, whatever tariff that they have, that will become zero if they take a US raw material input.
No, so just to understand, what is the proportion of exports that Bangladesh does with American cotton or American raw materials, which puts them at 0%, and don't Indian companies do the same?
See, when this tariff discussion started with USA, Bangladesh has been asking for this option. They do not produce any cotton. They don't have cotton farming. So most of the cotton was going from countries like Brazil and China. They have been importing. And there also found is the yarns which are imported into Bangladesh was cheaper compared to the cotton which they can spin into yarn. So keeping that in mind, the biggest, I think, yarn exports was happening from India into Bangladesh, followed by maybe some other countries. So in this case, what they have been proposing is that if they make the yarn out of US cotton, then they should get a duty-free access. So far, that particular business of US cotton spun into yarn in Bangladesh and making into a garment has been very small amount. Because costing-wise, it was not working out, and if this duty-free advantage comes, then how this calculation works out for them, that we need to see. Also, what is the component of, in the garment, what percentage of component has to be from US? That will be the deciding factor. What I'm hearing is 70%. That means a certain amount of garment can be made with the US cotton, which will have a duty-free access. May not be a very large number as of now. How this number pans out over the next months and years, we have to see that.
Okay. Pallab, just trying to understand, you are, I believe you have operations in Bangladesh and India both, right? So
yes, we have a significant operation in Bangladesh. In
Bangladesh as well. So just try and dissect this for us. If your Bangladesh operation were to take US raw material, and it might come at a particular price, versus whatever you're doing within your India ops, what would the cost benefit, and assuming that your Bangladesh ops therefore get this zero tariffs, what would the advantage be for that side of the business versus the India side of the business?
That's a difficult question to answer at this point of time.
Okay.
What I foresee is that immediately the US customers might start demanding that, okay, let's put this made out of US cotton kind of product from Bangladesh. Now, that logistics and what is the actual cost that comes out, whether it is more than the 19% advantage that's going to get or not, that needs to be worked out. So what I'm saying is that what will happen now, we are using all cotton yarns out of India to make the garments in Bangladesh. So whatever knitted garment that we make, we generally import all the cotton yarn from India and then convert into the garment out here in Dhaka. So there would be a pressure from US customers to change that and start using US raw material.
Great. Okay, Pallab, but I'm also trying to get this from a perspective of somebody who's not a Pearl Global MD, but an industry person, that is this something that could be a problem for Indian textile exporters who don't have those Bangladesh operations, only have India? Or do you think that this differential will not be very material because there is also the EU FTA into play, etc., etc.?
Sorry.
Please continue.
Yeah, my first reaction would be not a very big advantage. But you see, like, being in news, being the attraction to the US customer, they definitely will get some advantage. Yes, like, I have not got a first reaction as of yet from my customers as of yet. Don't know how it will pan out. But yes, what is most important to understand is that Bangladesh continues to be an important in terms of garment, and it will be competitive to India. So far, their biggest export have been to the European Union, followed by USA. They will be losing out on the LDC status next year. That means by 2029, unless until they do a treaty with the European Union, there could be a little bit of toughness in the Bangladesh market. So I'm sure like they are also upping their game and doing all these negotiations with various countries. And
So a lot of moving parts,
Yes.
And maybe India can also look at some similar deal. One thing that stood out for me from what Pallab said. Pallab, thank you. I need to take a break, so we'll have to end the conversation here.